Doctors, are you running your practice as an S corporation and you're making north of 600,000? Then this is my question for you. Is your tax advisor telling you exactly how much salary to pay yourself? Because if you overpay yourself, you're quietly handing the IRS thousands and potentially losing 2 deductions in the process. I'm Dr. Taxtor. Let's get into it. So here's a bit of S corporation tax basics. In an S corporation, your income splits 2 ways. 1, the W-2 salary you pay yourself, and 2, the profit that passes through to you. So where you set your salary becomes very important in 2 different ways. Number 1, payroll taxes. Generally, the lower your salary, the lower your payroll tax is going to be. And for physician, the piece that matters is Medicare tax, because unlike Social Security, the Medicare tax never caps out. So it's a tax with no ceilings. The meter never stops running. So every extra dollar of salary you pay yourself will get hit with Medicare tax. So paying yourself a leaner salary can reduce the Medicare tax. Number 2, PTET deduction, which is a federal deduction most doctors have never heard of, one that dodges the SALT cap. So if you live in a state with an income tax, most states now let your practice pay its entity state tax directly. It's called the pass-through entity tax, or PTET. And that payment is deductible at the federal level outside the SALT cap. So the less you take as salary, the more income flows through the entity, which means a bigger PTET payment and a bigger federal deduction. So that's the double benefit of paying yourself a lower salary. Lower payroll taxes on one side, the bigger PTET deduction on the other, both pushing the same direction towards a lower overall tax bill. But hear this clearly, this does not mean that paying yourself $1 as a salary. Reasonable compensation has a therapeutic window, just like dosing a medication. Too high, you get the toxicity, you lose these deductions. But if it's too low, the IRS can reclassify your distribution as wages with back taxes and penalties on top. So your salary has to be reasonable for the work you actually do. That's why the reasonable compensation analysis is important. It finds a number that's defensible to the IRS and still captures both deductions. I'm Dr. Taxtor. Dose your salary like you're dosing a drug, because healthy income deserves a healthy tax plan.